Welcome to ISE's FX Options Weekly Outlook, a weekly outlook on the US dollar versus the major currencies, hosted by Jason Ayres, a top industry instructor and founder of OptionSource.net. Learn to trade your views on the strength or weakness of the US dollar.
Well, hi there and welcome to the ISE FX Options Weekly Outlook for February 16th, 2009. I'm your host, Jason Ayres, founder and president of OptionSource.net, and as always, we're going to start with a look at our weekly U.S. dollar index. This is a great way to gain perspective as to how the U.S. dollar has been trading against a basket of currencies. Now, as you can see here, the U.S. dollar index continues its month-long consolidation along the upper range of our 84-85 focal zone. This continues to lend credibility to the potential of a retest into that 88-89 area. However, a break below 84 opens the window for a backfill into that 81-82 box. A quick look at a daily snapshot shows that the ascending continuation triangle that has been forming over the last several weeks is still indeed intact. This is a bullish sign that further lends credibility to the possibility of an upside breakout into that 88-89 box. With that in mind, let's take a look at the first of our ISE FX options pair values, the CDD, the US versus the Canadian dollar. Now, the one thing that we have neglected to highlight over the last several months is this large sideways triangle that has been forming, which is generally known as a continuation pattern, but does depict some indecision. We can see that more recently the pair value has been trading into a tighter range. This 122 to 124 focal zone continues to be a key support level, suggesting the probability of a test into that 128 to 130 area. If this pair value does begin to consolidate below that 122 level there, then the window does open for a test down into that 114 to 118 box. That being said, a break above 125 will lend further credibility to that push into our higher focal zone at the 128-130. And a break below 122 and a consolidation will further suggest the possibility of a continuation down into that 114-118 level. Next up, the YUK, the US versus the Japanese yen, and we identified the 90 to 91 focal zone as being an important support level for this pair value. As you can see, last week the YUK pulled back into this area and bounced, suggesting a test of that 93-94 focal zone as being a high probability. Now, a break and a close below 90 opens the window for a test back down into that 87-88 support. Well, as observed in the U.S. dollar index, the EUI, the U.S. versus the euro, continues to hold within this ascending continuation triangle as highlighted last week. Now, the 77.78 level here clearly is an important resistance to this pair value, and a break above this with any conviction opens the window for a test into that 80 to 81 upper resistance level. The longer this resistance level holds here, however, at the 77.78, the greater the probability of a test back down into the 74.75 box. Well, we anticipated some backfilling in the BPX, the U.S. versus the pound, and after a natural retracement back to 71, the pair value settled at the end of the week to find support at the 68-69 focal zone. Now, that 70-71 area now becomes a natural resistance level with a break above that targeting back into that 72-73 box. If the 68-69 area does not hold, that opens the window for a test down into this lower support at 65-66. Well, we were also anticipating some backfilling in the AUX, the US versus the Australian dollar, and after a natural retracement up into the 152-153 box, we can see here that the pair value lost some ground at the end of the week, although closing on the highs of the day Friday. Further consolidation below this range opens the window for a retest of the 146 to 148 area and 140 to 142 in the bigger picture. I'll move back into this range above 152, 153, and a close above 154 opens a window for a test into this 160 to 162 box. Okay, let's take a look at a few of the key points. First of all, the U.S. dollar index still shows signs of testing that 88-89 focal zone as it continues to find support within that 84-85 range. Although a bullish pattern has been identified on the daily chart, we are waiting for a stronger conviction to the upside. The CDD, the U.S. versus the Canadian dollar, has formed what appears to be a sideways continuation triangle and is still consolidating between 122 and 124. A close above 124.5 opens a window for a test of that 128 to 130 focal zone. However, consolidation below 122 is going to support a test of our lower focal zones. The YUK closed above 91, once again suggesting a test into that 93-94 range is a high probability. The EUI is moving in a similar manner to the dollar index. A close above 78.50 will lend more credibility to a test of the previous highs. However, resistance is strong. The BPX closed at a key support on Friday. A bounce here is likely to meet with some resistance at the 70 to 71 focal zone. A break here opens the window for a test down into that 65-66 range. And finally, the AUX closed below a key support level after a natural retracement. Further consolidation here opens the window for a test of that lower support level. A break and close above 154 will support the test of a 160 to 162 area on the upside move. And that has been your ISE FX Options Weekly Outlook for the 16th of February 2009. I'm Jason Ayres, founder and president of OptionsSource.net. Thanks for joining me here this week. We'll see you here next.
Thank you for participating in this week's session. Please join us again next week. For more information about Jason Ayres and to sign up for free FX Options trade alerts, just visit www.optionsource.net. To learn more about ISE FX options, including our weekly webinar series, visit us at www.ise.com/fx. ISE FX options can easily be traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.